Welcome back. And while, of course, we have talked about the agri space and Castor has been a buzzing space, but in the global markets as well, there has been plenty happening, which you really can't ignore. So while, of course, on one side, you have the manufacturing activity from US, Japan, China and Eurozone coming on the weaker side, the service sector number also has been the weakest in last 3 years. And the US and trade talks, while are on, the US is talking about imposing 18%, 10 to 25% tariff on 18th of October. And that clearly has had its impact on the commodities. Starting first with the crude oil prices, where we are looking at 6% of decline coming in for this week. Gnanasekar, what is your sense? I mean, this one has really turned bearish. The last couple of weeks have been weak, and the previous quarter gone by actually has been the worst quarter in the last 1 year. Do you see further declines now coming in for the crude prices?
I think, from present levels, I'm a little wary of more downside from here, simply because one is it's a very key support level. And then the supply issues that are still going on have more or less subsided, and we've seen Saudi back into full supply by now. But still, that has a little bit of a tightness in the market. And let's not forget that the Saudi kingdom is very clear about the Saudi Aramco IPO, and they want to see it through. So I don't think they'll be happy if the prices go below $50, and that would greatly hurt the valuation for Saudi Aramco in a big way. So my sense is that there is going to be a lot of support at these levels, but if the trade war prolongs like the way it is prolonging and there is no good news that comes out from the meeting in the coming weeks, then there is a good possibility we might break down much lower. Okay. But if there is a positive news that is going to come out, then maybe we will see a decent recovery from there, which will be again kind of short-lived because we still don't have very clarity of demand. So having said all that, I think from present levels, it's not looking that good to be bearish. Okay. And I would rather look to start buying on dips from there.
Kunal, are you of the same view? Because 2019 has seen some of the worst supply concerns and issues come in that should have supported crude prices, but that hasn't been the case. With the kind of profit taking that we see after every reaction on the higher side, what is your sense for the near term? What range are you working with?
I think it is very difficult to control the fall of crude oil, because considering the fact that the way OPEC has cut the production, that seems to be ineffective. So in last 2 years, OPEC has almost cut more than 2.7 million barrels of crude oil production, and in spite of that, oil prices are continuously going down. We have a Middle East geopolitical tension, uncertainty over Iran. I think considering all of these, oil prices are still not moving up. So it is showing major weakness. And on the demand front, the global economy is clearly slowing down. So we have seen all the major central bankers have done the downward revision to their GDP growth estimates. So the demand growth is also faltering. So I don't see any respite for oil. I continue to see oil prices are going to drift further. 36.50 are the kind of levels where I'm eyeing on MCX, and I'm still bearish. And I think that oil prices psychologically, WTI $50 support it may take, but eventually if the things are not improving, we don't see any positive news like any solution in the US-China trade war, I think oil prices are still going to slide further.
Okay. I like the word psychological, because that's exactly what we look at when it comes to commodities. It's very sentimental on where the prices start moving. It's more sentimental actually when it comes to crude than any other commodity. But the gains have come in for the precious metal prices. And what a rebound, Gnanasekar, from the lows in this week itself. We are holding above 1500 and closing this week on the positive as well.
Absolutely. I think, in line with the US service sector data and the PMI data from China, clearly there's a global slowdown that is affecting markets. And when you have a slowdown, I think the safest place to park your money is gold. So that's what we're seeing. Whenever we see any negative news flows coming from the economic numbers, we see a lot of money moving into precious metals. And we saw a decent correction to close to $1485. And from there, it's been quickly bottomed, which only means that I think the market is on the tenterhooks, even though you have the trade talks going on. Let's not forget that the US and Europe are now in some kind of a tit-for-tat tariffs that's going on the food items. So it clearly gives jitters to the markets as a whole. So I think the upside is still intact, and the medium term to long term upside is even more intact, because the global growth story is going to ensure that the central banks keep cutting rates. So that's extremely favorable for gold. So I'm still bullish. We're looking for 1650 by end of December.
Okay. Coming to metals then, and all the concerns that we spoke about in crude also impact the metal prices, where there has been pressure. Actually, in case of aluminum, Amit, if you look at the LME net shorts, that's gained up by 23% as compared to last year, same time. You follow, of course, the Indian prices. So apart from international macro, the Indian rupee, the domestic production and consumption, where do you see metals like copper and aluminum?
Aluminium, zinc, copper and lead in Indian markets are trading at a deep discount as compared to LME. And the reason is that there is complete destocking happening in the entire supply chain. So probably this is pointing towards some kind of a recessionary trend.
So do you see further decline in most of these prices? I mean, are you buying, accumulating at these levels, or do you think there is still some more downside for the rest of this year?
I think in the domestic markets, we'll continue to see a weak trend.
Kunal, what is your sense? Are you looking at the same kind of view for the international LME metal prices?
Well, I think the fundamentals are definitely bad. There's no second thought that metal prices are definitely going to go down. But the fact is that the central bankers are going to cut interest rates and print more money going forward. So I would say from here, we are not expecting any major downside or any sharp downside. So yes, the trend is still negative, but perhaps during the after the Fed meeting in the month of October, you may see another rate cut. Bank of Japan also may ease now in line with what ECB has done. So I think the flush of liquidity is again going to come in, and hence the value for the commodity increases, the value of metal price increases. So you can expect copper prices to decline further, but we are not going to see a big capitulation or a big sharp fall from present levels in spite of the trade war is worsening or not. I don't see the very limited downside from here, but the triggers for the upside still remains to be seen. So for the time being, yes, it looks weak. One should follow the trend, but it's not going to go down more than 2-3% from present levels. So I'm not expecting any sharp downside from here.
All right, not a collapse, but it's going to be on a weaker side is how the base metal prices may continue for the nearby future as well. With that, thank you so much, guys. Amit, Abhishek, Gnanasekar and Kunal for joining us and talking on all those whole host of commodities on what really has happened in this week and the expectation on what we need to look forward to in the next week as well. With that, it's a wrap up of this edition of Commodity Champions. Thank you for watching.